Well, I think there's two parts to it. One is the negativity was too much. Now, we are 5% off of this week's bottom, but I think there's a lot more room to run. May not be in a straight line, but there are positives out there that I've been crowing about for some time, whether it's infrastructure spending, CapEx, or people traveling again. So I do think, and I've been saying it for quite some time, you're supposed to get invested here. If Marco wants to go to technology and the hyper-growth companies, I won't fault him for that, but I will say I still see the better opportunities in the cyclicals. Now, energy's run too far. I'm not adding there, but industrials, financials, even some of the materials still have some opportunity in them. So that's the second part, is those are the sectors I'm more interested in. The bigger picture, I really applaud him. I think he's absolutely right. Things got oversold.
But
we had a 5% bounce in 2 days.
Yeah, I get you.
Go ahead, Scott.
Kerry, this is right in your ballpark, right? I mean, this is what you argued the other day, and he goes as far as to say the correction in bubble sectors is now likely finished.
Well, of course, that's Marco's job, to make those predictions, and I applaud it. What we know for sure is that we might be up 5%, but the Nasdaq was down 23%. And people talked a week ago about how there were absolutely no buyers, no bids for any of these tech names that had gotten just trounced down 50 to 90%. And it was really that the sellers had finally sold, dumped, puked out all of those shares that they had accumulated in 2020 and 2021. And there was nobody left to sell, and a few buyers, the stragglers in there. I mean, we bought some, I talked about it, and that's what made these stocks pop. So, yes, I think that there are many places that you can buy stock. But, of course, we need to be careful. You just can't keep loading up and assume the market goes straight up vertically the way it went up back, 2 years ago when things started to rally after the pandemic. And remember, we have the risk of recession. There's a war. Interest rates are going up. There's inflation. Much of that has been discounted. Again, if you think about what we saw March 24th of 2020, right. That was when the market bottomed, and that was when things had only begun to get bad with the pandemic, and the market then went straight up for many months.
So I read you this. Look, he is not suggesting, go all in everywhere. He suggests we know that not all assets are cheap, and one can still find expensive segments in mega caps, defensive, and low volatility stocks that are sensitive to rising rates in a slowing U.S. economy. But Pete Najarian, when you look at, and I really want to focus on these so-called bubble areas because people have lost a lot of money in these stocks and maybe are thinking about opportunities to try and get back in, or those who weren't even in this space because they thought it was too expensive, that now's the time to buy. You've been very critical of the so-called no multiple stocks like the ARK names, okay? ARK itself is down 54% from its 52-week high. Shopify 64, Block 57, Zoom 73, Coinbase 59, Unity 57, and on and on and on. Is now the time to take Marco's advice and start buying some of these bubble area stocks?
I would say this. I am still cautious. And buying the stocks? No. Buying the options? Sure. And it gives you an opportunity to be there, Scott, if this is something that's going to move for a while. But I still think you've got to be very, very careful, because even though these names, and I think this is really important and not enough of this is talked about, even when these names get cut by 50%, that doesn't necessarily mean they're cheap. That means that they were extremely overvalued, and now they still might be overvalued, and they probably are overvalued in many cases because they don't make money. And that's been part of the problem the whole time for me, is a lot of these very mature names that don't make money. I'm not sure at what level some of these names actually become a buy. I do think there are a list of names out there, however, that were extremely high multiples that give you a chance as we've seen this drop. But I still don't know, Scott, that you want to be putting in your account a lot of these names at this point in time with stock. I think that's why the option world right now has been great. 48 million contracts trading yesterday. Gives you a good example of just how active things were in a market that moved 500 points up, 500 points down, and then moved all the way up again. So it shows you the markets that we're in, the volatility that we're in, the velocity of these moves, and those Chinese names. They were absolutely smoking yesterday. Today, they're getting smoked a little bit. So I think that you've got to be very, very cautious as you approach what types of names you're looking at here. Are you looking at the quality names? Or are you looking at the high flyers that were high flyers 2 years ago that maybe don't really have that kind of a runway still in front of them to go to the upside?